Let's get into trader psychology a little bit here because, what we've been talking about the last, 10, 15 minutes about the fluctuation of price depending on the conflict. When markets move this quickly, and we talked about how the price of oil went up pretty fast before anyone even knew what was actually happening to the oil, what mistakes show up most often among traders when you're seeing this volatility?
It's a reaction to what they're hearing, what they're seeing, and talking to other experts that come on the business channels and how they feel about the price of oil or gold or what have you. The knee-jerk reaction to this market's going much higher. I need to buy in, or I need to get out of my short position. Which is, of course, quite common. Open interest was falling in gold and silver when it was making all-time highs. That means that weak hands were buying the market. It wasn't strong hands in for the long haul. And now we just saw the same thing in crude oil. Investors who were short the position are buying their way out of their short contracts in order to cut off any type of risk that they have. The idea that oil just went from $75 a barrel to 120 basically overnight means a lot of panic buying was going on. And in the industry, there's something called the GMO, and that's get me out. And that is like the type of buying that took place in precious metals a month or two ago. And now what happened, I think, in crude oil this past week.